How's it going, everyone? Matt Leighton, and welcome back to another video. In today's video, we're going to be talking about how to get you the best rate on your mortgage. I'm here with Rich Conlon from Atlantic Coast Mortgage. Rich, let's dive right into it. What are some ways that we can do and that we can find to get the best rate for a home loan?
Programs vary. You get your conforming high balance via your government loans, but universally top tier credit. So credit scores 760 or above, regardless of the loan program, you can position yourself for the best available rate in that program. And the other big factor is down payment.
20%.
20%. You actually could probably for conventional loans. Per se, if you just conventional loans only, actually 20 is optimal. Actually, if you increase to 25 or even 30%, sometimes you will see a slight adjustment and could get a slightly better rate than you would at 20%. So
how about 10% for conventional?
10%, it will be most likely, it'll be, if not the same, a little bit, about an 1/8% higher probably than 20% down. Just because Fannie and Freddie will take into account a risk factor, and a risk factor is down payment. So 20% start there, 25% if you have it, you could see an improvement. And then obviously top tier credit, 760 or above across the board, doesn't matter what loan program, you are going to be positioned for top tier terms.
Credit, down payment. Are there any other, or would you say those are the top two things you can do?
Yeah, I mean, the only thing is to not get confused between, if you're looking at a loan for $300,000 versus a loan for $500,000, the rate is going to be different slightly because of what it is considered in terms of a conforming loan versus a conforming high balance. Since more money is being lent at the $500,000 amount, then it's an added risk to the investor. Conforming loan amounts go up to $424,100 in the Northern Virginia region. Most counties it will differ, but for the most part, DC, Arlington, Falls Church, Fairfax, down to Ashburn, $424,100 is conforming, and then above that by $1 all the way up to $636,150 is the high balance. So you'll see about an 1/8% to a 1/4% jump between those two, and then anything above $636,150 is going to be slightly different. But again, that circles back to credit scores. You'll put yourself in optimal position for those loan programs.
So that's kind of what you can do as you can make those decisions and adjust those things depending on your shopping habits. But imagine a scenario where someone calls you and say, "Hey Rich, I got a referral to talk to you about a loan. What's your rate? And tell me as soon as possible because I have 10 other people I need to call. I need to call my bank, I need to call my credit union, and whoever gives me the lowest rate, that's who I'm going to go with." Maybe they don't say that last part, but I'm sure you've dealt with.
Yeah, that's kind of, you don't need to say that.
Yeah, so when you're rate shopping, so is there going to be a significant difference? Because I would imagine someone is going to try to undercut you immediately, but maybe they're not disclosing something else on the back end.
Yeah, there's always, anyone can run a general quote or estimate for you, and just need basic information as to what your loan amount and credit score is. And so when we do get those calls, obviously we understand it, and we respect that. It's a consumer's fiduciary responsibility to reach out to a couple different lenders because rates will vary.
A couple, not 20.
Yeah.
Right?
Yeah. If you got that kind of time, then by all means. But definitely reach out to a couple. You probably will see a slight variation, not anything huge. If you do, then obviously you want to cross that one off the list. But when we do get those calls, we do like to ask the basic questions to give them the most accurate quote in terms, credit score, what's your loan amount again, what type of down payment, that sort of thing, where the property's located, We do like to ask those questions because obviously being transparent up front is crucial. And then anytime we are giving quotes, unless specifically asked for, we always show a 0-point quote. So if, that's something that we do caution with your online lenders that read the fine print. They'll just post general rates. They don't adjust them during the day when rates actually do adjust that way. So that is something to caution with. If you check it at night and you come tomorrow and it's still there, it could be gone by 5 o'clock the following day. So do always read the fine print. Some will have and say in there that it is going to be a point charged to get that rate. So that is something definitely to keep an eye out for when you are shopping online. And then if you're talking with a lender on the phone or emailing them and they send you a quote or whatnot, if it's itemized out, then that's great. If it's not, it's always great to follow up and ask them, is this a 0-point quote? So.
Gotcha. The end goal here is to get you the best rate possible, and you can only adjust, and you only have so much power with your down payment, right? It is what it is. You only have so much money in the bank, but definitely do your due diligence. Reach out to a couple lenders and ask the right question, because if you call someone up and say, "Hey, nice to meet you. What's your rate?" The lenders get 500 of those inquiries every single week. So I'm guessing you probably need a little more info than that.
Yeah.
So do your homework and reach out to a few lenders, and that is what you do to get the best rate.
Yeah, and one thing too is it does help, and we've spoke on this before in terms of mistakes. We can always go off of what you think your credit score is, and then sometimes we'll actually pull a mortgage credit report, which is different than your consumer credit report. So if it's not top tier and you thought it was top tier, by reaching out in advance, if you're still in the early stages of your home search, we can help you figure out how to get to 760 and above to get you the best rate. So that is a benefit of reaching out early and positioning yourself to acquire the best terms available.
Love it. Cool. Well, for Rich and myself, thank you very much for watching. Be sure to subscribe if you haven't already, and I'll catch you in the next video. Until next time, create a productive day. Take care.